My name is Kate Pickett. I am the Enterprise Zone Program Administrator for the Department of Housing and Community Development. This is actually the first time that we have done a CPA Agreed Upon Procedures training. And so I'm excited to offer that today. It is really thick with information. And so I think the important thing to remember is that first off, I will send out this PowerPoint to everyone. And secondly, all of this information that we're going to be going over today can be found in the CPA Agreed Upon Procedures Manual, which is on the DHCD website. We're just going to be going over that information into detail, taking on some examples, and also taking any questions that you may have. I asked for some housekeeping measures for you to please put yourself on mute. And also you're welcome to turn your video off to be less distracting. So let's go ahead and jump in and get started. Hey, Annie, will you give me an audible yes that you can see the PowerPoint well?
Yeah, we're able to see it.
Okay, great. DHCD is committed to creating safe, affordable, and prosperous communities to live, work, and do business in Virginia. The Enterprise Zone program is currently part of DHCD's Community Revitalization Office. And our mission is that we're committed to coaching communities in a way that is resourceful, collaborative, educational, inspirational, and practicable so that they are empowered to take actions that build local capacity. Some of the pictures right here on the screen are from some of the programs we have that are within CRO, including Enterprise Zone, the Industrial Revitalization Fund, Port Host Communities, and Virginia Main Street. Here's our agenda. I'm going to be going over an overview of the grant amount and eligibility requirements, documentation and responsibilities, and then also procedures for both the Real Property Investment Grant and the Job Creation Grant. And because this is so thick in information, I added pictures of past projects that received Enterprise Zone funding just to liven up those PowerPoint slides a little bit. Agreed upon procedures test and report on the assertion of a business or qualified zone investor as to their qualification to receive Enterprise Zone grants. And the findings of these procedures are reported in the attestation report. This report is required of all real property investment grants and most job creation grants. And we will go over those specifically that are not required in future slides. The Enterprise Zone program is a partnership between state and local government to encourage job creation and private investment in targeted, distressed areas that are across the state. We do this through the 2 grant programs, and state incentives are available for zone investors who create jobs or invest in real property within the boundaries of the Enterprise Zone. There are 45 Enterprise Zones throughout the Commonwealth of Virginia, as far west as Zone 52 in Wise County, and as far east as Zone 26 in Accomack and Northampton counties. This is just a small snapshot of the last qualification year, which was grant year 2020. There were 196 total grants awarded. You can see here that we awarded 42 businesses in about 1.9 million in total awards. We awarded 154 properties for over 12.5 million in total awards. Qualifying for state incentives. So first, going over the Real Property Investment Grant. That grant is based on the calendar year and it's administered annually. The cash grants are performance-based. So it's more of a reimbursement. Jobs must be created and real property investments must be completed before those grant applications are even submitted. That's why it's 2022 and the deadline is April 1st, 2022 for any jobs created or real property investments for which the final placed in service document was received in calendar year 2021. So that's any time between January 1st and December 31st of 2021. Like I said, the next round is due April 1st, which yes, is April Fool's Day, and it really is April 1st in which they are due, and that's a Friday this year. Agreed upon procedures engagement. As required by statute, a CPA must perform the agreed upon procedures outlined by DHCD in the AUP document. The CPA must be independent of a company and currently licensed in the state of Virginia. So a CPA that is already employed by the company cannot be responsible for the attestation requirement. The document outlines specific procedures to be performed, and the report must be submitted online with all application materials by the deadline for it to be considered on time. Findings must be reported on the required forms. Those forms have the support of the Virginia Society of CPAs. We ask that you do not retype the procedures or submit findings on any other document. Please don't make your own Word document and copy and paste. Please use the forms that are provided for you. They can be found on our EZ online submission system. This is a link that you can click on for that submission system. And like I said, I will be sending out this PowerPoint in the future. Reports submitted that do not state the findings for each procedure are considered incomplete. The AICPA professional standards state that practitioners should report all findings from the application of the agreed upon procedures, and a practitioner should avoid vague or ambiguous language in report findings. So here's an example. Based on those professional standards that have been set forth, providing one's initials or the words "no findings" by each procedure does not constitute an adequate description of findings, and we will find the application to be deemed incomplete. So as an example, in this part of the CPA attestation requirement, it says that the CPA shall inquire of the source of all grant monies used to fund the qualified real property investment by obtaining management representation to determine that federal, state, or local source funds of grant public funds were not used to purchase items on the schedule of qualified real property investments. So you don't want to simply say no findings or provide your initials by that question. Instead, an appropriate response would be no grant monies were utilized for this project, or received $3,500 in local grants. That amount was listed in the application and subtracted from the total qualified real property investments. When we're going over the applications and we're going over your CPA attestations, we want to know that you looked at every single question and were able to go through that. And that's why we require more than just simply no findings on the application, on the attestation, excuse me. Submittal requirements. All applications and additional attachments must be submitted through the system no later than 11:59 on April 1st. All applications submitted without the CPA attestation will be considered incomplete and late. In the past, we accepted both hard copy and electronic submissions. Last year was the first time that we did mostly electronic submissions. This year is the first time that we are not accepting any hard copy submissions. Everything is done online. All of the documents that you have done in the past are completed and signed and then scanned and submitted online into the application system. When an application is submitted, the person submitting it will receive 3 different confirmations. After you submit it, it will say that a successful submission of the online application has occurred. If you do not receive that immediate notification, then it is probably safe to say that your application did not go through for some reason, and you are always free to email or call me and ask me if it went through so that we can ensure that it did. Once we start reviewing applications, we will give CPAs and also copy the zone investor on notifications of deficiencies. These are any problems that we find with the application or the CPA attestation. And you have a certain amount of time that we're going to go over in a future slide to resolve those deficiencies. And at that time, we will send out a notification of the resolution of the deficiencies. So let's go over some of those agreed upon procedures. But first, we're going to go over some eligibility requirements. For the real property investment grant, a property must have an eligible end use. So that includes commercial, and that also includes office space, industrial, or mixed use. For our purposes, mixed use is defined as a building that has at least 30% of the usable floor space devoted to commercial, office, or industrial use. Investment thresholds are established based on the types of improvements that are being made on the property. For rehab or expansion projects, the threshold is $100,000 that must be met to be eligible. For a new construction, the threshold is $500,000. An applicant must be the entity that capitalizes on the investment. That is one of the questions we get the most. Obviously, we're going to go over some of the supplemental forms that include tenants, that include people who own condos, who have multiple owners in the building. There's always some sort of confusion about who gets to apply for the grant. It's whoever is the entity that capitalizes on the investment in their books or deducts the investment as a business expense under federal treasury regulations for tax purposes. Units of local, state, or federal government are not eligible. Local, state, sorry, I'm repeating myself. Nonprofits are eligible if they meet other requirements. The grant term is a 5-year period, and grants are available for up to 20% of the qualified real property investment over the threshold amount. Grants are capped at $100,000 for total investments less than $5 million, and at $200,000 for total investments more than $5 million. Here's a chart of investments, thresholds, and then the grant awards. We have it divided over here by construction type. As you can see, in the last couple of years, solar was added as a construction type for which a zone investor can receive grant money. You can see here that for a rehab or expansion project of $500,000, the threshold is $100,000. Let's pretend that you're using $500,000. So the total grant eligible funds would be the 500 minus the 100 to give you the $400,000. 20% of that in the grant request would be $80,000. And for proration purposes, which we're going to go over, it may be 88 cents on the dollar. So 88% of that 80,000 is the 70,400. The thresholds must be met each year that an RPIG is applied for and do not carry over. So if you have a project that applies for a grant in this upcoming year, let's say they were eligible for the full $100,000, but because of proration, they did not receive all of it. They received 88,000 of it. Yes, they would still be eligible for 12,000 more in the next 5 years, but in order to be eligible, they have to meet the threshold requirement again. RPIG applicant responsibilities. The zone investor will provide the CPA with the following information. The Form Easy RPIG. So this is the main form that they will be using to apply for the grant. It has most of the information that you will need. That form will be scanned, signed, and uploaded into our system. And then also some parts of that form are actually in the system, and you have to put the information in there as well. The applicant will give you all invoices and receipts for QRPIs, that's qualified real property investments, capitalized or expended by the zone investor. The final placed in service documentation issued for the complete QRPIs. The zone investor will also provide the following applicable documents if necessary. For mixed use buildings, they will provide the measured drawings for the building indicating the square footage and use of the building. For zone investors applying as owners of space within the building or a condo, the closing documents or deed of trust indicating the building's square footage. And for zone investors applying as tenants, they will have to give you the current lease agreement indicating the building's square footage. Your responsibilities in the CPA attestation. So you will be responsible for ensuring that Form Easy RPIG and all other required attachments, including supplemental documents, are complete. You will be responsible for ensuring that the zone investor only included qualified real property investments and all costs listed were either capitalized or expensed by the zone investor. We're going to go over all of these in more detail in just a minute. And that the real property for which the investments were made has been placed in service during the applicable grant year. So for this upcoming grant year, that's 2021. Also, if applicable, you will have to ensure that they have the following supplemental documents, including the RPIG mixed use. So let's go over each procedure. Procedure 1 is the attestation of a completed application. You will read Form Easy RPIG and report that all required attachments have been prepared in the prescribed format and that the form contains the signed declaration. You also have to ensure that they have a completed Commonwealth of Virginia W-9. It's really important to get them to check that the remittance address is correct. Very often we have people submit that W-9 and the remittance address is not correct, and then they don't get their check and they're wondering why. And it's because the address that they gave us isn't correct. Also, it's important to determine that a copy of the final place in service documentation shows the same physical address as referenced on the application, and that approval of that final placed in service documentation is within grant year 2021. So your final placed in service documentation could include a certificate of occupancy or a final inspection if permits were required by the locality, and if not, it could be a third-party inspection. Those must be dated anywhere between January 1st and December 31st of 2021 to be eligible for this next grant year. Also, they must have a completed, signed, and notarized supplemental form for a mixed-use building, if applicable, and also for multiple owners or tenant owner consent forms. Those all must be completed, signed, and notarized, if applicable, for their specific situation. Procedure 2, attestation of qualified real property investments. The CPA will read over the itemized list of QRPIs, as well as all the invoices, receipts, and AIA documents to determine that only QRPIs are listed. So those QRPIs include expenditures that are associated with any exterior, interior, structural, mechanical, or electrical improvements necessary to construct, expand, or rehabilitate a building for commercial, industrial, or mixed use. It also includes excavations, grading and paving, installing driveways, and landscaping or land improvements. So those are all your hard construction costs. When I'm talking to lay people, I like to tell them that if you were to pick up a building and shake it all out, if something comes out, it's probably not a qualified real property investment. If it stays in and attached to the building or the property, it probably is a QRPI and probably is a hard construction cost. In addition, in the case of cost categories listed on the schedule that include more than one type of work, such as if they were to list drywall and demolition, then a breakdown of the work included in the category must be obtained by the CPA and read to ensure that it meets the requirements for a qualified investment. The CPA will report any items whose qualifications are uncertain, including the exact dollar amount for the corresponding QRPI submitted on the electronic and hard copies. The CPA will compare the schedule of QRPIs to the general ledger entries to determine that the items and costs listed were charges to the appropriate capital asset account or expense account. The CPA will obtain and read 100% of invoices, receipts, AIA reports, and any other relevant documentation of construction expenses. You will compare these documents to the dollar values presented on the schedule of qualified property investments and report on whether those charges agree. The CPA will obtain and read the itemized list and the contents of the attestation report to determine whether the total investment reported on the form meets the applicable minimum investment thresholds, which we discussed earlier. The CPA shall inquire of the source of all grant monies used to ensure that any funding that was provided by federal, state, or local grants of public funds are not used to purchase items on the schedule of QRPIs. Procedure 3, attestation of placed in service documentation. The CPA will read the placed in service documentation, which indicates that work is complete and up to code as evidenced by the placed in service date. The placed in service date indicates the calendar year in which the zone investor applies for the grant. The CPA will read to ensure that that document is final and no other documentation was issued or pending. That's really important. The way you can do that is by confirming with the locality's building office. Last year, we had multiple situations in which a final inspection report was released or a final inspection was released to us as the placed in service documentation. But when I was doing due diligence to call the building office to make sure that that was the final document required, we were told that actually a CO was still pending. And so unfortunately, we're not able to accept that final inspection, and we need the CO to be dated for the appropriate calendar year in which the grant is being applied for. In cases in which the final placed in service doc was only for a portion of the building or facility, the CPA will read the QRPI amount to determine that it only includes work completed on the portion covered by the placed in service document. When that document is a final certificate of occupancy, you will look at the physical address to make sure it matches the address on the application. You will make sure that the date of issuance is for the appropriate calendar year, that it's not temporary or pending, and that in the case of a shell CO, the CPA will read the app to determine that the zone investor is not a tenant of the building. And if they are, they must fill out that supplemental form. You also need to make sure that the name listed on the CO matches the name on the application. If it's a final building inspection, you're going to do the same process, and the same goes for a third-party inspector's report. In cases where the locality did not require building permits, then a third-party inspector's report can be used and submitted, and the CPA will read an official letter from the building code official from that locality to tell us that no permits were required for that, and that's why a third-party inspection was given instead. Procedure 4, attestation of square footage for mixed-use buildings. The CPA will determine that if the building has indicated mixed use on the application, the applicant has provided the supplemental mixed use form. They also must provide completed measured drawings and plans by the preparer that submitted those drawings to the locality. They must check that it contains the processional seal, AIA, or a notarized signature of the preparer, if not an architect. If no formal drawings were required by the locality or the zone investor prepared their own, the CPA will determine that a licensed third party has signed and sealed the form certifying that at least 30% of that usable floor space is devoted to commercial, industrial, or office use. And you will also determine that the 30% is mathematically correct based on the square footage amount and the usable amount. If a building has multiple owners of space, or it's in a condo, the CPA will determine that the square footage indicated in the closing documents or deed of trust is accurately indicated on the supplemental form, that the zone investor has coordinated qualification with all other owners of the building. If not, then DHCD's proration procedures will be used. I'm not going to get into the details of the proration procedures, but those can be found in the CPA AUP manual. The CPA will ensure that Form Easy RPIG multiple owner has been completed and that it's indicated on the Easy RPIG form, and should compare the form to any backup documentation provided by the applicant, such as the closing documents or deed of trust, and report on these findings. The CPA will determine that the form is mathematically correct by looking at that square footage numbers again, and they will ensure that the form agrees with the grant requested by the zone investor, indicated that the grant is either being prorated or has been coordinated with all other owners. Procedure 6, this is the final procedure for an RPIG, the attestation of tenants in a building. If the applicant firm is a tenant in the building or facility, the CPA will determine that square footage information indicated in the current lease is accurately indicated on the supplemental form. They must be provided with access to the lease, and the purpose is to ensure that the zone investor has obtained that consent from the building owner and has coordinated qualification with all other tenants in the building. If not, once again, DHCD's proration procedures will be used. The CPA will determine that if the applicant has indicated tenant in building, the supplemental form is complete and signed, and they have been provided a valid lease that agrees with the form. The CPA will also determine that the form has been completed and gives consent to the tenant to apply for the grant, information is mathematically correct, and that all of the information on the forms agree with one another, and the square footage agrees with all other information on the original Form Easy RPIG and the tenant coordination form. Let's go over a couple of common errors that happen in real property investment grants. So the first one is that placed in service documentation is not final or indicates pending work or a failed inspection. The zone investor must apply for the grant year associated with the calendar year of the final documentation. So let's say that someone started work on a property in calendar year 2020. They finished it in calendar year 2021, but they did not get their certificate of occupancy or inspection until January of 2022. That person would not be eligible for applying for this upcoming grant. They would wait until next year to apply for grant year 2022 funding, and that would be due on April 1st of 2023. And so that goes to the next common error, which is placed in service documentation for consecutive phases of a project were received in a different calendar year. Application spans multiple addresses in the case of a facility, but the CO only references one address. Zone investors can only apply for work covered under the final placed in service document. If the work covered multiple addresses, multiple COs should be presented, or that CO should reflect all addresses. And this should be noted on the Form Easy RPIG. Differences in address entered from one year to another. So please make sure that you look at the physical address and that it's exactly the same as in previous RPIG applications for that zone investor. If the grant cap is exceeded due to address errors, then grant awards must be repaid to the Commonwealth. Excuse me, I didn't mean to click that one. Properties improperly identified as buildings instead of a facility. Grants are capped per building or facility. The property must be correctly identified so that applicable grant caps are not exceeded. Sometimes the building versus facility part is complicated, confusing, and it takes a lot of talking out. That's my job, and I'm happy to help you with that in any way I can. You can contact me and we'll decide together whether it's a building or a facility. Vague or conditional items listed on the schedule of investments. It's best to break down individually all investments listed, and instead of sidewalks, you would have sidewalks on there, but instead of site work, include the specific terms such as excavation, concrete, or general conditions. Lack of detail when including conditional items. So a list of conditional items can be found on page 12 of the RPIG instruction manual. And I apologize that says 2019. That was an edit that I missed there. So don't list change orders, but instead list additional flooring work so that we know what those change orders were. At this time, I'm going to take any questions about the real property investment grant before we move forward to the job creation grant. And Annie's going to help me with any questions. If you want to unmute yourself, you can, or you can put the question in the chat box. It's very quiet, so I'm thinking that maybe there aren't any questions. Either I explained really well or I confused you really well. I see here, Mark Nelson says, are the forms on the website the most current ones to use for 2021? The answer is yes. They were not as late as last week. We got things updated, and for the website and for the application site last week. Everything is current now. Also, I want to tell you that the Real Property Investment Grant Manual, as well as the Job Creation Grant Manuals, were both updated last week. The new updated form of the manuals have been added to the website and also the easy submission site. Paul Fagan, applicants must submit applications, right? Not CPAs on behalf of applicants. Yes, Paul, the applicants, you're correct. Applicants must submit the applications. Are there any other questions? Give you just another couple of seconds, and I'm going to take a second to take a sip because I've been talking a lot. If there are no other questions, we will move on to the job creation grant. Let me figure out how to get back to my screen. Let's do a brief overview of eligibility requirements for the job creation grant. Of course, the business must be within the enterprise zone boundaries. The business must create at least 4 net new permanent full-time positions over the base calendar year. So we had those thresholds in amounts for the Real Property Investment Grant. The threshold for the JCG is 4 net new permanent full-time positions. In this PowerPoint, you may see me abbreviate that by PFTP. That means permanent full-time positions. Base year employment can be either of the 2 calendar years immediately preceding the first grant year. Base year employment is established in the first grant application, and that remains static for the full 5-year period. So if a company is applying for this upcoming grant year 2021 job creation grant benefits, that means their jobs were created in calendar year 2021, and it means that their base year can be 2020 or 2019. And the reason that we give you two choices, that allows you to maximize your use of the grant by how many people were employed during the base year and how many have been added over the years. These positions must meet wage and health benefit requirements. Positions must earn at least 175% of the federal minimum wage or 150% in high unemployment areas, and we're going to go over that more. Firms must cover at least 50% of employees' health insurance premium. The following entities are prohibited from applying for job creation grants. So any unit of government and also nonprofits, and the following entities are positions that are prohibited: personal service, food and beverage, and retail positions. So sometimes people will ask us, let's say that I have a hotel. Does that mean that positions that are in the hotel are not eligible for a job creation grant? It doesn't mean that the whole hotel and all the positions in it are not eligible. It just means that if there's a restaurant within the hotel, then those food and beverage positions are not eligible. If there is a retail shop in the hotel or even a gift shop, those retail positions are not eligible, but other ones are. And there's a full listing of the NAICS codes in the Job Creation Grant Manual. So let's go over these eligibility requirements. This is a quick update of what that wage rate threshold is, and it's different for high unemployment areas. And some of you may know that the General Assembly passed last year new legislation to change our rules for the job creation grant. Instead of the federal or Virginia instead of federal minimum wage, it will be federal or Virginia minimum wage, whichever is higher. That does not go into effect, or it did go into effect January 1st of 2022. It does not affect these upcoming grants at all. It affects the jobs that are added in 2022. So for the jobs added in 2021 that we're going over, you want to use this chart provided. The grant term is 5-year periods beginning with the first grant year in which the JCG was awarded. To be eligible for years 2 through 5, the firm must maintain or increase the number of eligible permanent full-time positions above the 4-job threshold. So if you have a firm that created jobs in 2020 and they want to reapply in 2021, they can apply for those exact same jobs that they applied for in 2020, as long as they continue to increase the number of eligible positions above the 4-job threshold. Firms may apply for a subsequent 5-year period given they meet the grant eligibility requirements. So as we stated earlier, these are based on wages paid and the number of months positions were filled during the grant year, and firms can receive grants for up to 350 positions per year. And it's important to know that it's based on position, it's not based on a person. So if you have a position that was open at the beginning of the year, you filled it with an employee, that employee left for some reason, and another employee comes into that job, you can still get that job creation grant for that second employee. Businesses may not qualify for the same positions for JCGs and major business facility job tax credits. Eligible employees include a person employed by a business firm located within enterprise zone boundaries who is normally scheduled to work full-time based on the following: a minimum of 35 hours per week for entire normal year of operations, 35 hours for a portion of taxable year in which the employee was initially hired or transferred, or a minimum of 1,680 hours per year if standard fringe benefits are paid by the business firm for the employee. Grant awards will be prorated based on the number of full months of the grant year in which the employee met the wage and health benefits requirements. The following situations would trigger the proration of the $500 and $800 grant per position. An employee was employed less than 12 months in a grant year. An employee only met the wage and health benefit requirements for a portion of the grant year, or the employee's wages changed or the federal minimum wage changed during the qualification year. Those all would trigger proration. Ineligible employees on the worksheet, and I will show you an example of the worksheet, are positions paid less than those minimum wages, positions that were not offered health insurance coverage equal to at least 50%, or employees not meeting wage or health insurance thresholds should be included on the worksheet, but will be automatically filtered out of the grant calculations. Here's a good example. Let's say that your base year is 2019, employment level at that time was 10 permanent full-time employees. Your grant year employment level is 20 permanent full-time employees. All positions earning 175% of the federal minimum wage, all worked between January 1st to December 31st of 2021. All 10 are offered health benefits equal to at least 50% of the premium. So you would take your 20 grant year employees, subtract the 10 base year employees, subtract your 4 job threshold, which would equal 6 grant eligible permanent full-time employees, times your $500 grant for your 170% of the federal minimum wage to give you an award of up to $3,000. This is a full list of ineligible employees. I won't go over all of them because I see that we're a little pressed for time, but positions not meeting the requirement of full-time, once again, those retail, personal service, food or beverage, seasonal, temporary, leased or contracted, a person that previously qualified for a JCG in connection with a different location on behalf of the same taxpayer. So if a person worked for a company in a different enterprise zone for the same company, but moved to this new enterprise zone for the same company, and they received job creation grants from the first enterprise zone, they'd not be eligible for the second ones. Here's another part of the extensive list. This might be the same slide twice. It is, I apologize for that. High unemployment areas. So there are a few high unemployment areas throughout the Commonwealth of Virginia. Any business applying as an HUA applicant must fill out the Form Easy JCG HUA and the HUA worksheet. These 2 documents are specifically tailored to accommodate the reduced wage threshold. That worksheet has different formulas in it for the HUA, for the high unemployment areas rather than the regular areas. And so it's important that they use those specific worksheets. And these are the localities that are included as HUAs. Responsibilities of the applicant. They should provide you with the JCG or HUA online worksheet. And they should also let you know employees receiving raises or decreases in pay during the grant year. That must be listed on a separate line for each wage fluctuation. Applicants may not use their average rate or ending wage rate to represent an employee's annual wages. Ooh, that wages was getting me there. I was getting a little tongue-tied. It's getting late in the day and I've been talking a lot. They must also supply their I-9 and pay stub or payroll records to you, indicating the first work date, last work date, and wage rates in the base year and grant year for every employee listed on the worksheet. They must provide health benefits documentation, and the business firm representatives must provide signatures verifying that there are no retail food or beverage personal positions included, and that those positions have not been churned from another location within the Commonwealth. And also that all employees listed meet the report to work requirement. I know some of you may be thinking about that report to work requirement and how it might be different now that we have been in the pandemic and a lot of positions have gone to work from home. We're going to come out and send out a document that specifies this very clearly, but the gist of it is that if a person was hired in a position with the intention of solely working from home without any requirement to come into the office, then they would not be eligible for a job creation grant. But if that position is required to report to work, and if COVID did not exist, they were required to be in the office and not work from home, then they would be eligible. And like I said, we'll be sending out those materials in the next week or so. CPA attestation responsibilities. The JCG attestation procedures are structured to ensure that a company is not personal service, food or beverage, or retail, or has those positions applying. The company only includes permanent full-time positions, and that employment dates and wage rates for positions listed on the worksheet are accurate and identical to information on payroll and personnel documentation. Procedure 1, attestation regarding prohibited positions. The CPA will read the NAICS code listed on the form to determine that the code listed is one other than the codes listed that are not eligible. You will also notice that if a business is not a retail business but has retail positions, in the case of the hotel that I said earlier, the firm is eligible for job creation grants, but only positions that are not retail. Procedure 2, attestation of permanent full-time positions on the worksheet. The CPA will follow the sampling procedure explained below to obtain employment documentation and the worksheet for employees filling permanent full-time positions during base and/or grant year. The CPA will report the applicable procedure that was followed in establishing a sample. And so our rules for sampling include the following. Firms with 100 or fewer employees filling those PFTPs, the CPA will obtain a random sample of documentation for 20 employees that are permanent full-time employees on the worksheet, and read to ensure that the start and end work dates for each one agrees without exception, that there are no mistakes on the provided information from the payroll records using random sampling techniques. If there are 20 or fewer employees, then the documentation and worksheet calculations for all employees will be included in the sample. For firms with more than 100 employees, the CPA will obtain a random sampling of payroll records and health documents for 20%. The CPA will read to ensure that the start and work dates for each is agreed without exception to the information provided using random sampling techniques. For a random sampling, the CPA will obtain a random sampling for the greater of 20 employees or 20% of employees listed. The sampling will be based on a table of random numbers. You will first assign each employee listed on the worksheet a unique number. Then the CPA will select cases for the 20 employees or 20% when their ID number corresponds to the number chosen from the table. The CPA will indicate on the worksheet which employees have been selected and sampled. The CPA will stop selecting cases when you have reached the desired sample size. So that's either your 20 employees or your 20%, whichever is larger. If an ID number is selected more than once, then the CPA will ignore that repeated number. Non-reconciled errors. Should the CPA find any non-reconcilable errors, so any unexplained difference between information on the worksheet and documents provided in the sample population, then you should repeatedly select 20% or 20 employees from the original population until the sample produces no non-reconcilable errors. The CPA shall submit by name any non-reconcilable errors found during this procedure in the report. So if your client chooses to revise the worksheet and application to remove those items, the CPA shall read to ensure that the revised worksheet has omitted those non-reconcilable errors and that there are no resulting changes from the original worksheet. Procedure 3, attestation of required documentation. For each employee from the sample population, the CPA will compare the JCG or JCG HUA worksheet for base and grant year employment information listed on the required documentation. So that's your I-9, your first payroll, your last payroll for base year and or grant year, and health benefits enrollment information provided by the company. In the case of a business in a qualification year other than its first year, the sample should only include the grant year information. It does not have to include the base year information. The base year employment should only be sampled in the first grant year along with grant year employment. This is a sample of the JCG worksheet. As you can see, there's been a random number assigned to each employee on the left. That one doesn't look so random. You can write in the next column whether it was included in the sample. You have the employee's name, last four of the social, their first work date and their last work date in the base year. And then that will be totaled in a formula for the months worked. And then the same thing for the grant year. Then you have the column whether or not it was offered benefits, and then hourly wage rates for employees listed in only grant year. Employees should only be listed on the job creation grant online worksheet one time unless they have worked 2 or more separate times in the base or grant year, or the grant year employee's wage fluctuated during the grant year. So to accurately calculate grant awards, separate rows should be included showing the start date and end date for the separate employment period. So in that case, going back here, the person's name would be listed twice, as is the case with Henry Lee III and John Tyler Sr. Attestation of required documentation continued. The I-9, you will obtain the sample population's I-9s to determine that those names, socials, addresses, and start date of employments are correct. In cases where the I-9 was signed prior to the actual hire date, for example, required as part of the job application, the CPA will read and compare the I-9 in conjunction with the supporting employee payroll documentation and attest to the hire date of the employee. Payroll records for the base year or grant year employees. So that's first and last day payroll records for the time the employee worked in base year or grant year. The CPA will compare the name and employee number, read and compare records to attest that the first and last work date for each employee within the base year or grant year corresponds to the dates listed on the worksheet, and also compare the wage rates as indicated on the first and last payroll records for those sampled employees. If an employee received raises or even a decrease in pay during the grant year, the employee must be listed on a separate line for each wage fluctuation. So they would be listed in 2 different rows as shown in the red categories before. Do not use their average wage rate or ending wage rate. If the sampled employee's wage rate was converted from salary to hourly, the CPA will determine that it is mathematically correct by dividing the annual salary inclusive of shift premium and commissions by 1,820 hours. Health benefits information. You will obtain and read the signed health benefits enrollment agreements and also compare insurance coverage materials indicating employer contribution to payroll documents, indicating employee contribution to make sure that they match up. The CPA should report all instances where the firm does not offer to contribute to at least 50% of the cost of the health insurance premium. For employees filling grant-eligible PFTPs that have declined that health insurance coverage, the CPA will obtain and read the employee's signed waiver, and for firms that self-insure their employees' medical claims, a copy of the firm's policy signed by the employee with wages listed is acceptable documentation. If a business does not make health insurance benefits available for new permanent full-time positions until after a 90-day employment period, then the initial 90-day employment period during which benefits are not available can be included in the worksheet. The firm should list the first date and last date that the employee filling the position met the wage requirement for those employees whose benefits were effective after a specified period, provided they were offered by the start date. Moving on to procedure 4, which is the last JCG procedure, attestation of grant-eligible positions with qualifying wage rates and health benefits. The CPA will read the qualification information on the Form EZ-JCG or Form EZ-JCG HUA, whichever is applicable, with the auto-calculated values in the forms of the cell of the worksheet and indicate any discrepancies in the attestation report. That was the final JCG procedure to cover. At this time, I'm happy to take any questions about the job creation grant. I see that Courtney has asked, for firms with more than 100 permanent full-time positions, we are supposed to select 20% of the total number of PFTPs, correct? Not 20% of the line items on the worksheet. That's correct, Courtney. It's 20% of those permanent full-time positions, not 20% of the worksheet, because the worksheet could have a position listed more than once. So it is the number of positions. Of course. Would anyone else like to put a question in the chat or to unmute yourself and ask a question live? I tell our local zone administrators, who are often the ones on the ground in the localities helping zone investors with these grants, that it's my job to be a part of their team to make things easier for them. And I'd like to say that to you all too. It's my job to be a part of your team to help you clarify things. If you want to ask me anything before you submit documentation, that's the best time to do it. Right now, from here until March is the best time to ask all the questions and get all the information you need. Come March, it gets really busy and a little bit crazy. And so I'd rather you ask questions ahead of time rather than not know and us have to tell you that there are deficiencies on the application or the attestation report. I know I went over a lot of information. I just want to let y'all know that once again, the PowerPoint will be sent out. And also all of this information is in the CPA Agreed Upon Procedures Manual, which is on our website. Are there any other questions? Thanks, Leslie. I appreciate that. I am going to just throw my email address here in the chat just so you will have it very easily if you need it. And I am happy to help in any way that I can. I thank you for taking the time today out of your workday to listen to this presentation and to learn about the agreed upon procedures in more detail. And so please feel free to email me should you have any other questions. Thank you, and I hope that you have a great week.